All right. Good morning, good afternoon, good night. So let's talk about a recap for today, August the 29th. So this is going to be a little bit longer of a video because we're going to step more through this process. But what we're looking at is what's already happened today. So we're going to jump into a replay and we're going to look back. We'll just start it right here after we get this initial attempted break of this pre-market setup here. So what we are looking for is kind of the opposite of yesterday, right? We have this drive down, we have this drive down. We're looking for some potential recovery and a continuation down. And so what we're going to look for is how data might support this. All right. So what I've done over here on the statistic side is I have only put in the data. I'm not even considering New York yet. We're just looking at what normally happens when the Asia and London sessions set up like this. All right. So normally what we will look at is a high side of a 0.1 to a 0.2. All right. And so if we were to go measure that out, that's going to look something like this. If we were to get a push, your 0.2 is going to be about there. So your high side is going to be there. Your low side is going to be somewhere right around in here, right? So this is kind of the area that we're looking at. Now, if we go back and look, though, the most likely time that this thing is put in its high is 1800, right? So if we flip back and we go look, I mean, the high is in at 1800. So we're looking at the high is most likely already in. Doesn't mean that it is, because we do have the possibility of this high of day zone out here. But, when we're looking at what we're talking about here, like this is kind of what it comes down to. So if we look at this data as well, it looks like it's just a possible grind down until the grind is over. Okay. So it looks like we get a potential drive at the open to the downside, a potential drive to the downside into the close. So then what's the next thing we go look for? So we're going to scroll down and we're going to look at this midnight level status, 64%. We're going to look at that 12-hour high, 52%. The mid is a 79%, and then the low is an 85%. All right. So then also we can go look at the potentials for these other models to have the mids broken, 76% and 65% respectively, as we go back up, right, into these Asia and London sessions. Now, this also tells me that these sessions, because there's a decent chance of going to get this mid, that typically this Asia session pulls a little bit lower. It pulls a little bit lower into the London session, which that didn't happen, right? We kind of sat up and really dumped into the London session there. So now we've got all of our statistical data-ish. Now we could go start mapping out low of day if we wanted to, but there's a lot of potential down here. So what we're basically looking for are shorts, right? And we're looking for other ways to find targets. So now what we're going to do is we're going to say in our data structure, we're going to jump back over. Now we know that this thing popped through this area here, so we're going to call this a long. See how that affects our data. So now we're looking still a lot of downside, still showing that the high of day is probably already in. Now this London break up here to this mid. So sorry, we'll look back here. This 81% chance of this London model status being broken, still looking at shorts potentially. This midnight status went to a 71%, but the settlement and the Globex level are pretty low, right? So what that's telling us is that this Asia session normally would have pulled lower, which would have given us a lower midnight, and it would have given us a lower London mid here. So I'm taking all of this into consideration as I'm trying to, figure out how we're going to trade this. And so we go look at the chances of New York session being false are 67%. So what that's telling us, right, if we look at that 67% here, so what that's telling us is that the chances of us coming back down through the low side of this pre-market zone is 70% ish, give or take. So, but with this overnight setup, we know there's going to be a lot more potential for continuous grind to the downside. So now, if we know there's a decent chance of this session turning false, we could do a little bit of wargaming, right? We can jump into this New York session because this is stuff that I do in the mornings. I look and say, okay, let's just say that we happen to pull back through this. Let's go look at the 12-hour low. So that's giving us almost an 80% chance to go hit this 12-hour low. All right. So what that means is there's almost an 80% chance to come down here where all this upside information was not so great. The upside, now the mid is pretty good. The mid was at this point is like an 87%, right? This 87% here. So then we can war game this, like we said. We could come back in and we could say, let's just say that this does pull, right? What are our stats then? So we're going to look and see. That gives us a 56% chance that, no, sorry, let's go back up here. My bad. So it's that looks like a 57 or 67% chance that we're going to come back up and break the London, a 76% chance. We're going to break London, a 76% chance, and it's either a 57 or 67. We're going to go break Asia. So from here, we'll scroll back down, and we're still looking at the high of day already being in, right? So everything is telling us that we're looking to short this thing. So it looks like the most likely low of day is going to be the 1.5 to 1.6. So just because, like, we're going to measure this out and we're going to draw it just to have it on the chart. All right, so we're going to draw this and we're going to give it a 1.5 to 1.6. That's pretty far down here. All right, so there's a 1.6 if we were to draw that. That's really far down. I do like that it's close to that monthly open though. But either way, if we were to go back and look in this data, this whole jumbled area, we could bounce anywhere in this zone. So now let's get back over here and look at how we would trade this. If we're looking to take this into the open, what we're looking to do is get it a little bit closer to the open. And we know we're looking to short, but this is kind of the opposite of yesterday where we're looking to short and add on moves up to try to take out this mid and to try to get any higher up. So once we get into or through this mid, we're going to look to add. All right. So that's the normal way that we might look to trade this. All right. And now what are we looking for to the downside? Well, we have this pattern here, right? So this pattern is going to take us, the first thing we're going to look to do is go sweep right here. All right, we're going to look to sweep and possibly bounce and hold that. We might try to hold this weekly open target, but ultimately we're looking to go get down here to this 23,428. That's going to be your ultimate target. Now, do you have to hold it that far? No. Right? There's lots of places it could bounce just depending on, what all the other tickers do here, right? But ultimately, we were looking at a possible grind down all day. So if we're just looking to trade the open, we're just looking to trade the impulse, we're looking to trade this thing down. And so what we'll be looking at, we can add a couple of additional targets here. We can say, we'll look at 557 because I love fib data. I really, really do. Yeah, so I really like this 562 zone. So we're going to say 562. All right, so we're going to draw a box around 562 area. So we'll say 562, just kind of down in here. That's kind of the area that we'd be looking to take this to. All right, so now, but we're going to keep this here just to see if we can get down to this 1618 here for this bigger pull. But either way, we'll look to take this trade into the open. see what, let's put our target down here so we're not cheating. So we make sure we take this at the right spot. Right, if we pop, we're going to add. We're not popping, and there's our target, right? We go to sweep this first zone when we're coming back up into it, right? And it's just a confluence area that we're looking to take targets. Now, if we wanted to take an initial target there, knowing that this high of day is in, the problem is we have this mid that is still a stat that we did not hit yet. So there is a chance that this thing could try to rip back up into this area up here before it continued down, as it did yesterday, right? So yesterday we came back and we got that statistical zone, that mid, before we continued on. So, yeah, I mean, this is, if we're looking out of the gate trades, we're looking for data to try to support what we're looking for here. Now we can continue to play this out. Let's see where our low ends up being here. Well, we're still playing it. It's still during the day. So our price range was, let's check it and see here where our price range was. I don't remember. It was 1.5, I think, to 1.6. Something like that. So we're going to say 1.5 to 1.6. That's where our low of day zone, if we were to jump back over here and look, yeah, 1.5 to 1.6%. So we're not too far off of that. If we were to dump down again, you know, ultimately it wouldn't surprise me if we tried to go reach down for this monthly opening target, because it tends to be a gravitational area. Something else that you know, you can take or leave is if you find good standard deviation levels and you go replay whatever you know, whatever asset you're trading, you'll find that once you come down through a particular zone for standard deviation levels, you are less likely to return back into the opening range, right? You're more than likely, you'll get recoveries, but you're less likely to get up into the opening area or go push back through the high. It doesn't mean that it never happens. It just means you're a bit less likely. So, and for the way that I use these standard deviation zones, whenever we get down into this 6 range right here, like you can't really see this because this screen is humongous, but whenever we get into this 6 range, which is where our target was, so once we get down in here, this is my initial caution zone for a point of no return. So if I were looking to bounce the market, it's usually here is where I start saying, this thing might not bounce. When we get down to 8 and we get down to 10, it becomes much less likely. It doesn't mean we won't bounce and get some recovery. It just means that we are less likely to get those, you know, those bounces that you would normally see to kind of set up, you know, a larger move to kind of capture push back into this opening area, right? To basically get back to where we started. Yeah, I mean, I think that's all I have for today. So yeah, I mean, if you're interested in getting access to this data, give me a shout. We could talk about it, and yeah, we'll go from there. Hope everybody's doing well.